Now, obviously, Greg Kelly is not going to be someone who comprehends the depth of has the intellect, the keen, the cunning, the insight, the insight. And this man, you can just tell the gleam in his eye. Where they could, it's Golden Child. Sometimes a line just pops into my head and I got to go with it. We're going to need somebody who, understands things in a way that most of us can't. And so we here, and by we, I mean the royal we, I mean me here at House Sparks Mega Worldwide, invite you to take a journey through the world of education and information with Ben Shapiro, a man who was shown a puppet show by Tucker Carlson last week and really did think a boy could fly or something. Yeah, so let's take a look. This is the title of this. Ben Shapiro breaks down massive bank crash. Whew, that's a lot. It's at the end of the road. It was so massive. I'm since this is 9 years in the future, and we're all watching this in the past, wondering how it all went wrong. We underneath some rubble of what used to be the society we enjoyed, we found Ben's laptop where he had been FaceTiming this to himself as a message. And we opened it up, and this is us watching it to finally figure out how it could go so badly so quickly.
Biggest bank meltdown.
Hold on.
Well, folks, the second biggest bank meltdown of all time, actually.
And they're playing background music, so he does not have a lot of faith that this is interesting on its own. Also, after the first, this huge drop-off.
It took place over the course of the last 72 hours.
Yes. In the last 72 hours, the second biggest bank collapse in American history was slept through by the vast majority of Americans because, yeah.
As it turns out, Silicon Valley Bank is apparently not the only bank that has the same kind of issues that shut down Silicon Valley Bank. Signature Bank has also been closed right now.
Yeah, it's just, it's all the woke stuff. It's got to be. I mean, look at the outside of that thing. They've got O's for Oprah all over the walls.
There is now...
And the irony is Signature Bank would give you money, and they didn't even ask for a signature. The kidney.
Talk about the possibility of other banks following in the footsteps of Silicon Valley Bank and having serious...
Oh my God, someone is asking that question? Wow.
Problems on their hands on their own. That would include, for example, First Republic apparently has similar issues to SVB. So we're going to go through exactly what happened with SVP, why it shut down, and we'll talk about whether there...
Are we going to call it SVP from now on? Or is that a slip up? It's SVB, but whatever. Okay, here we go.
There's a system-wide banking issue.
I mean, I'm just saying, since we're talking about banking, details matter. I mean, what do I know? Those could be boxes of pumpkin nuts for all we know.
The first thing to understand is that the reason for all of this is federal government mismanagement.
I see. The federal government mismanaged a private regional bank. Please go on.
The reason for all of this is because the federal government blew it on inflation and then had to ramp up the interest rates in order to fight the inflation. According to the Wall Street Journal, SVB Financial is the parent company of Silicon Valley Bank, which counts many startups and venture capital firms as clients. So this means that a lot of people are sort of laughing today because look at all the big tech bros who are about to go under. Now, here's the
reality. I know I've been telling you that big tech is the enemy this entire time, but we had our money in SVB. Peter Thiel said the Wire should put some of their cash there. We did, and it can't even. There we go.
Reality. What's actually going to happen is the federal government is going to bail out the depositors, meaning that all of the people who had their money invested in Silicon Valley Bank, everybody who took their money and put it in Silicon Valley Bank and left it there, and then they would take swing loans in order to pay their staff, all those people will be fine. It's the bank itself that is going to shut down. This does mean the federal government is violating its own rules. The Federal Deposit Insurance Corporation, which is supposed to give you back $250,000 of your deposits, right? Every time you go to the bank, you'll see there's like a little sign on the bank teller window that will...
Yes. Each depositor insured at least to 250,000. That part.
Say FDIC insured up to $250,000. Well, most people who are running companies keep a lot more than $250,000 there. The FDIC is going to fill in all of those people anyway. This does create a situation of moral hazard. But what happened here is that SVP Finance.
The moral hazard going where? Oh, you mean because the people who ran the bank might be tempted to fuck around even more, that banks, if they believe they will be bailed out, might engage in this bullshit again because it won't hurt them at all. Well, that's why the DOJ and the SEC have started investigations into the mismanagement of funds at the top of that bank and the two others, because you can make the depositors whole because they weren't risking anything. They thought they were using a functioning bank, but the people running the bank were engaged in fuckery. And those people are the criminal enterprise that could have cost these people their worth. And that money still exists. So they find a way to make it exist for a time, usually through making other banks pay up that amount. And then they police each other harder because a lot of the smaller banks, regional banks, have, agreements with bigger banks for funding if they need to backfill, cash reserves.
They had about $200 billion in total deposits by the end of the first quarter of 2022. That was a major increase in the amount of money that they had in deposits from the first quarter of 2020. In 2020, they had $60 billion in deposits. Mm-hmm. By 2022, they had $200 billion.
Huh. So, Trump president, Biden president. Trump to Biden. And more money in bank. Because Biden, bad. All right.
Why? Well, because
obviously they're Marxists and woke.
Between 20 and 2022, we injected more money into the American economy than any time in human history. We just.
Oh, I see. Money printer go burr. No, there was also a giant hole in the available amount of funds out there. SVB did not benefit from a giant slathering. People who got unemployment insurance or PPP loans, PPP loans, those folks did not put their money in SVB and suddenly become angel investors.
Shoveled money out the door. And a lot of that money went to the big tech companies. A lot of that money went to firms that didn't know where to put the money, and so they started shoveling it at tech. Because remember, that was a tech.
They didn't know where to put it. I mean, they could have put it in Citibank, or they could have put it in. They just had all this money. I mean, it was just sitting around. Jesus. So much fucking money. It's just, I don't know. So, I mean, you can't, it's not like you shop around for a bank. You just look across the street. And so many of these young startups, they're sitting there. They've got 16 suitcases full of small unmarked bills that smell like blood and cocaine. And they're like, we can't leave this at my mom's house. Her dog's peeing all over it. What about that one? What? Silicon Valley Bank. That sounds ridiculous. Why don't we put it in one of the big banks? What are you, nuts? They'll ask us where we got it. Good point.
Tech boom. It was really a tech bubble. It was very reminiscent of the dot-com bubble of 1999, 2000, where all of a sudden firms that really should not have been valuated at the valuation that they were being provided were.
None of this, by the way, has anything to do with government control or mismanagement of their behavior. So the idea is that because we had a $20 trillion hole blown in our economy, and the Congress and Donald Trump, and then shortly thereafter, Joe Biden, to a lesser extent, injected $6 trillion into the economy to fill a $20 trillion hole, that money, which went to largely UI and shore up small businesses and the like, magically just kind of like, it's like the entire country just tips towards Silicon Valley because everybody uses Facebook or some shit. And that money went into SVB because these people don't know any better, and it's Wild West, and they were Wolf of Wall Streeting.
Suddenly being valued at extraordinary prices because people had money just gushing out of their pockets. Like, what am I going to do with this? Pets.com. I can go take my money and I can put it in some weird venture capital attempt, and I can just throw the money at it, because what else am I going to do with this money? And so all of those companies then took their money and they put it in Silicon Valley Bank. And so you saw
Yeah, all of them. Yep. They all just took their money. Pets.com, Webvan.
Balance sheet expand
By the way, both of which I believe, like Pets.com went under because it tried to stay on its own. Webvan got bought.
dramatically for Silicon Valley Bank
Or their uppers went and worked for somebody else, but did basically the same
Financial.
thing.
This created a question for Silicon Valley Bank because the way that banks actually make money, they don't keep your money in a lockbox. It's not like you have a safety deposit box and you bring in your.
Oh boy, get your yellow legal pads out. Hey, Greg Kelly, pay attention. This is I've never heard this idea before. Now, go ahead.
$1 million and they take it in cash and they shove it into the wall or something. That's not what they do. Instead, it's all
Really? So you're telling me largely it's effectively ones and zeros, that it's kept on computer form, and that as far as cash reserves, they only have about 10% on hand legally because they have to. Someone should write that down and send it to Greg Kelly.
all digital. And what they do is they then lend out the money to other possible ventures, or they go and they buy bonds, or they go and they buy stocks. They invest the money themselves, and then they essentially arbitrage the difference between what they have in their coffers and what they owe back to you and what they think they can earn from the markets. So,
right. And that's where Joe Biden showed up with Hunter Biden with his dick out in the middle of a meeting at SVB and started telling them what to invest in.
so what exactly did SVB Financial do with this massive influx?
They called Joe Biden and Pete Buttigieg and said, look, we know you're the transportation secretary, but you're gay, so we thought we should ask you if you've seen our commercials. We just insist. And so I know Joe Biden's not really telling us these things. They obviously, we could call Oprah directly and she'll tell us what she tells him to say. But we'll play along. Where should we invest our money as because we're a little gun shy after the tech bubble. Actually, we aren't. We're looking for the next tech bubble.
Of cash, well, they started buying tens of billions of dollars of seemingly safe assets, primarily long-term U.S. Treasuries and government-backed mortgage securities, which means that SVB's securities portfolio rose from about $27 billion in the first quarter of 2020 to $128 billion by the end of 2021. And so they took all that money that was being thrown out there by the federal government.
And they didn't just keep it in cash just sitting there? Right.
Inflationary wave by the federal government. They took all that money and they shoved it back into U.S. Treasuries. Well, normally U.S. Treasuries are supposed to be pretty safe, right? I mean, the way the U.S. Treasury works is that you take $950, you invest it in a $1,000 bond, and that $1,000 bond is supposed to come to maturity in, say, 10 years. And that means that your rate of return on the $1,000 bond is, a few percentage points. And that's fairly safe because you know you're going to get that money back. The problem is, if the interest rates dramatically increase, then the value of your bond drops really dramatically. Because let's say that you buy a bond and that bond is going to give you a yield of 4%. And then suddenly there is an interest rate increase. And so the government is issuing bonds at a much higher rate. Well, then the market for your bond, which is going to earn you a much lower rate.
If you want to sell it and get out of it,
the market just disappears. Suddenly your bond is worth like nothing. Because
no, it's worth what it's worth.
I can go down the street, I can get a brand new bond issued by the U.S. government that is going to earn me a much greater yield than the bond that you are now currently. You're going to have to sell your bond at discount to compete with the new bonds that are being issued by the federal government. This is why when interest rates increase.
Why would you sell it at a discount? You would cut the price of. Oh, because you want to get out of it sooner because you weren't really buying securities to use as securities. You were manipulating the securities market and trying to shave points and, using the money from, instead of, loaning it out like a regional bank would do, you largely loaned it to the government as such. And then the government started giving more money to people who loaned their money to the government, and you were getting less money for loaning your money to the government, even though you were still making a profit. And because you'd hedged the rest of your company's available funds on crypto, you suddenly needed it.
The prices of bonds that are currently on the market tend to drop. So what happened here is that SBV Financial thought that they were being safe by buying a bunch of U.S. Treasuries, but they were being stupid because they didn't look at the market and say, okay, wait, inflation is likely to follow here.
Yeah, but what do they know about market economics. They're a small regional bank.
And so when inflation follows, you're going to have to ramp up the interest rates. When they ramp up the interest rates, what is likely to follow is that the bond holdings that we have are going to drop in value. So if there's a run on the bank and all of our money is invested, all of their money, all of your money is invested in the bonds, we're going to have to sell off those bonds at a loss, and that's going to bankrupt the bank.
So Joe Biden caused the run. Oh no, that was Peter Thiel. Shit. So without that run on the bank that was caused by Peter Thiel and that crowd after they'd lost money on their sale of the bonds, which they did to keep the Peter Thiels of the world happy and keep their money in the account, they wouldn't have. Oh.
That's essentially what happened here. We'll get to more of the explanation in just one moment. First, in this economic climate,
oh my fucking God, if this asshole is selling gold.
Pretty sketchy out there. You need to be cutting your monthly expenses because you just don't know what's about to happen next. Pure Talk saves the average family over $900.
Pure Talk. We're a conservative cell phone company that hangs up on anybody who's a bad influence. I don't know what it's like right in the middle. Jesus. And makeup, and he's selling, what the fuck else is he selling?
Fine lines, wrinkles, even those annoying under eye bags. Genucell.
Yeah, they are annoying, aren't they?
Will have you looking 5, 10, even 15 years younger, just in time for the warmer weather. Best of all, Genucell guarantees.
Just in time for the warmer weather. And by the way, is it just me, or does it look like that stuff didn't fix his baggy eyes? It just burned him. Doesn't it look like yeah, I mean, I may look like somebody took a lighter to my nose and my eye bags, but you're more worried about that than how tired I look.
These results in as little as 12 hours or your money back. I've been using Genucell because I don't get enough sleep. My wife's used it. My mom uses it as well. Try it for yourself.
Oh my God, the amount of bullshit. Okay.
They bought all of these securities. The problem emerged is that because they pay fixed interest rates for many years securities, that's not necessarily a problem unless the bank suddenly needs to sell the securities. Because
yeah, why would they suddenly need to sell the securities?
Market interest rates have moved so much higher, those securities are suddenly worth less on the open market than they are valued at on the bank's books. And as a result, they can only be sold as a loss, right?
Or held to maturity.
That's what I was telling you. The price on the bonds they had bought declined from when they had bought them because of the interest rate increases necessitated by the...
Yeah, if you're not gaming the system and you wait for that rotation very well, the ebb and flow of interest rates. And by the way, when you're buying interest rates at almost nothing anyways, you're looking for a place to zero out and park your money. You're not making money. Even in that situation, they sold those bonds at a loss because they got out early. But they effectively, materially recouped the majority of the amount of money they had in those bonds. They just didn't realize the gains that they were going to have, which was part of why people thought certain other investments the bank had value. It's another one of those situations. You see this on Wall Street all the time, where a company is profitable, but not at the level that Wall Street was hoping for, and so their stock goes down.
Inflation. So as the Wall Street Journal says, at the same time, SVB's deposit inflows turned to outflows because clients were burning cash and they stopped getting new funds from public offerings or fundraising.
It sounds like capitalism to me. It sounds like that's how it works.
So remember, all of their clients are tech companies. Those tech
mom and pop tech
companies are very reliant on inflation. Those tech companies were burning through cash at an extraordinary rate for about 2 years.
Expanding.
There. If you were a company that was in search of public financial capital, you would just seek to get bought up by what was called an SPAC. You sought to be bought up by a
SPAC,
publicly traded company that didn't have any content to it. It was basically just a slush fund. And
also nonsense. The main arm isn't to be bought up by a frigging SPAC. You obviously, like the vast majority of them, either they want to become the next big success or be purchased by one of the big dogs for a lot of money. See Instagram to Facebook.
It would buy you, and then you would become the publicly traded company. You've seen a few of these. Truth Social.
Yeah, it's a great example of a total success story that has no shady money issues at all. Jesus.
Was funded through a SPAC, for example.
For example, it's a great example. It is a perfect example of the uselessness of SPACs.
But when all the money dried up,
there wasn't another example. I'm shocked. You don't have another in the another background. Nope.
Then suddenly all of these companies came up short. They've been burning through cash at this extraordinary
Oh, you mean like Truth Social?
rate because there was so much cash flowing through the system. And then interest rates increased. People stopped spending money quite as much. All the investment.
No, they didn't. Oh, no, they didn't. As interest rates have gone up and employment has gone down, unemployment has gone down, and the people have wages have continued to increase. It's dogged the Fed that people are still spending money. God damn it, they won't stop. The American consumer apparently has no idea they're supposed to be completely destitute and living in an escape from New York hellish apocalypse.
Dried up. And at that point, everybody started.
Hal just likes to say SPACs. It's true.
Trying to draw down their balance at the bank. Again, they keep a certain amount of money at the bank, like what they have to by law, but then the rest of it is being lent out or bought or whatever. And so,
whatever.
Suddenly, if everybody goes to the bank at the same time, you have the Mary Poppins scenario, right?
Give it back! Give me back the money! There's something wrong. The bank won't give someone their money.
Everybody goes to the bank at the same time. It's a run on the bank, and everybody freaks out because they have to shut the windows. There actually is no money at the bank. On Thursday, customers tried to withdraw $42 billion of deposits.
Yeah, it's weird. They didn't have that much cash on hand. That's peculiar.
About a quarter of all of the money that was supposed to.
Customers. You see that line of people standing outside of the SVB branch? Those people were trying to withdraw $42 billion.
To be held at the bank. And it just ran out of cash. And then.
Yeah, there they are. All of them. That's what do you think? That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 14, 15. Maybe there's a couple back this way. What do you think? Each one trying to pull out $2 billion a piece in fives. There's something wrong with the ATM. What is it? I'm trying to take some money out and it won't do it. How much are you asking for? $2 billion.
Other banks started to get hit because there were other banks.
Right. Because they couldn't get money out of there, and so they started yanking their money out of the other bullshit regional bank that was doing the same stupid shit that SVB was.
Banks that were invested in this bank. Stocks of other mid-sized lenders like First Republic Bank and Signature Bank were halted on Friday morning, and in fact, Signature Bank essentially went into receivership for the exact same reason. They're invested in Silicon Valley Bank, and also they were heavily.
Yes, I can't go anywhere without seeing an ad for Signature Bank, almost like SVB. It's amazing how a great American institution could disappear so quickly.
Invested in bonds. And so the question becomes, okay, so what happens next? So
I'm going to guess that the individual personal accounts are insured up to $250,000. The assets of the bank will be sold, and the new CEO that was put in place, who was one of the people who oversaw the 2008 financial crisis, is going to make sure that the depositors get their money back, that none of it was stolen and mismanaged, and that all the profiteering that was done by the people who run the bank that might have, they will be the ones that will accept the losses of what's not available in the bank. So, yeah, because the money exists. It wasn't spent. It didn't evaporate. It does exist. It exists in the assets of the bank. The profits, that would have been realized over a couple of decades, that in and of itself doesn't exist. And so anybody who was partaking in that profit scheme, whether they were investors or the board themselves or shareholders of some sort, they're screwed. But everybody who had a deposit on a baseline deposit will get their money back because they will find it in the financial system and just say, boink, where would you like it put? And then if there was like $2 billion that was effectively stolen because they invested it without, following their fiduciary duty, or there was any shenanigans, that amount of money will then be added on as a service fee effectively in the FDIC, and the banks will end up paying that off over time in their insurance. So their insurance to be a part of the FDIC will go up slightly for a period, as it has before when stuff like this happens.
That's two questions. Question number one is, are they going to bail out SVB? Are they going to bail out the depositors? How many other banks?
You don't bail out depositors. Depositors don't need a bailout. Depositors have money in a bank, and they've either been defrauded, and in the case of like stolen goods, can get their stuff back. It's the same basic law. That they possess that is their money. It's just frozen in space in the assets that they've purchased and that they've held on to and that they have part of. They lost $2 billion on a single sale. They didn't lose $75 billion of the $75 billion in assets, and that money just evaporated.
Are in the vulnerable.
In a bank, by the way, that has $202 billion worth of assets, $137 billion of which are largely depositors' money, direct cash.
Position that SVB was in. How many banks are not telling you they're in that vulnerable position? And nobody really knows the answer to that. So there's a lot of
nobody knows the answer to that. It's weird. It's almost like there was a rule in Dodd-Frank for people to keep track of that kind of stuff, and Trump took it out.
Unease in the markets today, because even if the depositors of Silicon Valley Bank are bailed out, well, what happens to all the unsecured credit holders in Silicon Valley Bank? And there are a lot of people, in other words, who invested in Silicon Valley Bank. They're not going to get their money out.
Right. That's how investing works. Sometimes you eat the bar, and, well, sometimes the bar eats you.
Now, that money is
like your style, dude.
It's now gone. And Silicon Valley Bank was a big concern. So that means those people are going to lose.
It was a big concern. Great. Yeah. It was it was a circumstance. It was an enthusiasm. SVB was enthusiasm.
There's a lot of money, which means they can't hire. It means they can't fire. It means they can't, like, they're bankrupt. Right? I mean, it can bankrupt a lot of people.
A lot of. That's, I mean, again, can you slow down when you say numbers? Because we have to write them down. Somebody write down a lot of. I don't know whether we're going to add or divide by it, but we'll figure it out in a minute.
And so we are in the same situation, financially speaking, that we were during 2007, 2008, when you had a bunch.
No, we are not. We're nowhere near that. I can't be any clearer. No, this is not credit default swaps. These are regional banks that got over leveraged, and then they shut down, and the government steps in to a certain degree to make sure that the people who are innocent in that situation get their money back as best they can. And if they don't get all of it back, it's a lesson for next time.
Of financial institutions who are tacitly relying on the promise that the federal government was going to fill them in to make risky bets, and then those bets fail, and then the federal government does indeed at least fill in the depositors. Now, they're not going to save Silicon Valley Bank here. Silicon Valley Bank will not be a going concern from here on out unless there is somebody who comes in, sweeps in, and actually buys up the assets.
Somebody swept in and bought up the assets, by the way. Oh, by the way, it's an ongoing concern. Can I introduce you to? Give me 1 second. Who is Tim Mayopoulos? Mayopoulos? I'm going to go with Mayopoulos. Mayopoulos, the new CEO of Silicon Valley Bank. There he is, ladies and gentlemen. He's talking to a lovely lady with a low-cut, off-the-shoulder, black gothy dress and a glass of wine. And she's obviously got questions. He's got a glass of wine. He's holding it around the glass, which is warming the wine. And even though I don't drink, I know that's a relative no-no, but whatever. They live near Napa. Who am I to say? Silicon Valley Bank, which is under federal government control after becoming the second largest bank failure in U.S. history last week, has a new CEO, Tim Mayopoulos. Mayopoulos, they're just doing that to mess with me, who has other crisis experience, says the business will carry on as usual while he works to unwind the bank's assets. Federal Deposit Insurance Corporation was quick to intervene on Friday after Silicon Valley Bank faced a bank run in the face of mounting concerns over its cash flow and assets that had declined in value on Monday. The businessman he took over with Mayopoulos and then there's a blank, whatever. The businessman brings decades of legal and financial leadership experience, notably his time president and CEO of Fannie Mae, a government-sponsored company that buys and guarantees home loans. He led Fannie Mae at a time when it was still recovering from the 2008 financial crisis. He's acted fast to tackle the challenges at Silicon Valley Bank, reaching out to the bank's clients with a letter of reassurance on his first day. I look forward to getting to know the clients of Silicon Valley Bank. Where is it? Hold on. He wrote Monday, I come to this role with humility. I also come to this role with experience in these kinds of situations. Here's what to know. Who is he? Get out of here with this pop-ups. Jesus. He graduated from Cornell, blah, blah, blah. He began his career in law school, blah, blah, blah. He joined Fannie Mae, later as general counsel, vice president, corporate secretary. 2012, he took over the company's president and CEO positions he kept for the next 6 years. Under his tenure, Fannie Mae recovered from the recession and implemented new technology to bring more safety and transparency to mortgage lending. He moved on in 2019 to serve as president at Blend, a cloud-based software company that processes mortgages and consumer banking. After the FDIC took control of Silicon Bank last week, the agency tapped him to be the company's new CEO. Right as he took up the role, he assured clients that the lender would continue conducting business as usual. We are here to serve you. I recognize that the past few days have been an extremely challenging time for our clients and our employees, and we are grateful for the support of the amazing community we serve. In the letter, he explained that the FDIC transferred all assets held by Silicon Valley Bank to an FDIC-operated bridge bank called Silicon Valley Bank NA. By the way, you'll sometimes see that NA, and that's because stuff like this has happened before. And then the bank continues on with that NA title, which I think is North America, whatever, to dissect it from any of its other branches overseas, where depositors have full access to their money and both existing and new deposits are protected. The Federal Reserve and government announced on Sunday that even customers with deposit over $250,000 insurance limit would have full access to their funds because they're not gone. It was mismanagement of the financial profits of the bank that got everybody out. And again, that's on the that's the investor's ass. So, but what do I know? You know, they're probably gonna. Ben knows better. He'll tell us what's probably gonna happen.
Now that could have been
also in all fairness. This video is from yesterday, and where did that guy go? I lost it. Sorry. He joined the bank on Monday. So before Ben made this video.
done on the open market anyway, right? There could have been Elon Musk talked about buying up Silicon Valley Bank, for example, and then going and finding
with what
investors to fill in what depositors were owed. Because it's not like Silicon Valley Bank had no money. It's not like they went from $200 billion in holdings to $0 in holdings. They still were able to liquidate some of the bonds that they had on the market. They would need somebody to come in and buy them up and fill it back in, and people would presumably continue to invest in Silicon Valley Bank once they realized that the run was over.
I don't know about you, but I'm starting to think this Chicken Little fellow is full of shit.
But that's not what the federal government did. So the federal
I'm sorry I showed you Mike Pillow's bloated face without warning. I apologize.
federal government had basically two concerns here. Concern number one is making sure that this thing did not spread directly from Silicon Valley Bank to the rest of the system. That there
And it didn't.
wasn't a meltdown where depositors lost their money, and so everybody across the system went, hold up a second, my money is not safe at my bank. I'm going to go do a run on the bank right now.
Yeah, which you would have to be a moron to do in relation to the collapse of a regional bank. Now, there's enough morons out there that they could probably make a dent if they all did it at once. But they seem to be busy working, Ben.
And because there is a sort of herd mentality when it comes to this stuff.
Yeah, GI. So there's a herd mentality. So you might even say that it would be unethical, immoral even, to talk about these issues using fear-mongering doom sprayer terms that might trigger such an event that is not warranted. Wouldn't you?
Is my bank safe? Are they doing the same thing? Are they lying to me? And everybody
Are you my mother?
goes get their money at the same time, and suddenly a lot of banks start to go under. The other is the moral hazard created by the simple fact that over and over and over again,
Every time we turn around, these bank people,
the federal
he's moving very dark. He's moving into very dark Greg Kelly territory here.
government keeps doing things, and people keep relying on the federal government to fill in the gap. In 2007, 2008, The presumption was for everybody who was invested in subprime mortgages that the federal government was going to back their play because Fannie Mae and Freddie Mac, which were quasi-government subsidized, they were backing that play. In 2007, 2008, the smart money was that the federal government was backing subprime mortgages. So what's the big deal if we mix in a bunch of crap subprime mortgages with actually like good mortgages, and then we mix it all together, create a credit to...
Yeah, you mean the system that Hank Paulson helped create before he was brought into the Bush White House, and the Bush White House fomented by trying to get this like a fake housing boom that just led to the Armando Longos doing chain purchases of single family homes with nobody in them that caused a cascading ripple. You mean that? I'm sorry, no. Something about Obama and Biden caused this by triggering it before they even got into office.
Derivative structure that allows us to create a crap sandwich, and then everybody eats the crap sandwich, but most of the sandwich is not crap, so it's probably okay.
Again, this is a lot of technical mumbo jumbo. If you need to take a break.
Okay. Well, as it turns out, the federal government stepped in to save everybody from their own stupidity.
No, they didn't. No. They could save the people that were worth saving. Lehman Brothers went under, other investment groups that were related to this. There was a huge ripple that went through worldwide, by the way. And ultimately, the federal government and the U.S. taxpayer made money on the 2008 bailout because the banks had to pay that money back. And the sooner they paid it back with interest, the sooner they could get out from under the more egregious regulations of control that were put on them until they straightened up and learned to walk right.
In relying on the federal government. Same sort of thing here. All of these...
Totally. Wasn't them biting the crypto apple and thinking, oh, we could pay these fucking things. Like, we're just doing bonds to dick around. Don't even look. Like, just buy the bonds because the government makes us. But just look at, Dogecoin to the moon. I saw Elon last night at a party.
Companies relied on the federal government not to raise those interest rates to dramatic levels.
Why? What kind of an asshole thinks that 0.125 interest rates are going to last forever, especially 5 or 10 years? They can't.
That's exactly what happened with SVP. They said, yeah, we can see that you're inflating.
SVB. All right. Fuck it. Let's just call it SVD at this point.
Currency, but we'll bet that you're not going to raise those interest rates to high levels, even as Jerome Powell was saying we probably will.
No, even as Jerome Powell was doing it.
And then, of course, things went south. And now they're going to get bailed out by the federal government. At least the depositors are. And it's a question as to how...
Depositors don't get bailed out. Depositors get their money that's available in the assets of the bank. That's not a bailout.
How many other institutions are going to be...
Investors get bailed out. Like, owners get bailed out. Depositors get their money that is theirs. It's like, I don't know, this is so fucking weird. It's like saying somebody who got their car stolen is getting a bailout from the government when they find the stolen car and return it to them. Oh, what's that smell? Yeah, it looks like a vagrant used it as a bathroom. You got any interesting leads, man? Leads. So that's it. That's that. Welcome to the talking point graveyard of the great bank crash of 2023. That is all Joe Biden's fault for not reinstating a rule that Donald Trump got rid of that started all this shit as a cascade. But again, I would like to remind you, the Republicans are the party of personal responsibility. If you do something wrong, you admit it. If you were wrong about the relaxing of rules, you just go, whew, maybe Biden should have brought it back in or tried to bring it back in right away, but it was wrong for Trump to do that because clearly this was a result. It's almost as if all Trump did when he was in office was light 2-year-long wicks. Remember, he removed the COPS program and the pandemic response team 2 years, almost to the day when COVID and Chauvin hit at the same time. not a surprise.